move on to the next conversation, which is a fireside chat on the topic of tier 2 cities, the warehousing growth hubs. While our first panel did touch upon that, now let's talk in detail with our eminent panel members. The session is moderated by Amit Goenka, MD and CEO, Nisus Finance. He's part of the advisory board of the funds managed by Nisus Finance, and that has spread the growth and corporate governance of the fund pools, the NBFC and the advisory services of Nisus Finance. Amit Goenka brings over 23 years of top-tier multinational experience in banking, direct investments, and strategy, and has been responsible for over $7 billion of transactions worldwide. So this is our eminent moderator of this session. Let me now introduce our speakers in the alphabetical order. We have with us Mr. Nirav Kothary, Executive Director, Godwitt Construction Private Limited. He's an industrial real estate veteran with more than 19 years of experience and looks after the execution of projects, leading the team since Godwitt's inception and developing close to 1.1 million square feet of industrial space. He had earlier worked with Jalan in strategic consulting department and went on to head the industrial warehousing department, later heading the Ahmedabad, Gujarat office. Our next eminent panel member, let me introduce Mr. Pratiik Jalan, Director, Jalan Builders. Pratiik Jalan has developed multiple logistic parks, including Sankrail Industrial Park, Amta Industrial Park, and Bagnan Industrial Park, giving a new face to the warehousing sphere in Eastern India. He has adopted the latest technology, taking infrastructure development of prefab solutions to a new era in the commercial, industrial, and warehousing segment. So this is our eminent panel for this fireside chat. Amit, let me hand it over to you now.
Thank you very much, Sapna, for that wonderful introduction. And what a pleasure to be amongst two extraordinary experts, East versus West. One coming, representing the western part of the country, and Pratiik representing the eastern part of the country. So it'll be an interesting perspective of East versus West within the warehousing space. Of course, I think it's made our jobs a bit tougher because the previous panel has actually covered a very large spectrum of things which covers the sector of warehousing within the country. But of course, I think what's more now relevant for us within this fireside chat, and it's a pleasure to have you guys on this panel, so thank you for making time, is to actually discuss the nuances of these cities, because we all know what's happening with Mumbai, with Delhi, with Bangalore, with Chennai, and some of the major 6-7 metros in terms of warehousing. We know that about 287 to 300 million square feet of warehousing has already come up, which is likely to double in less than about 3 years' time. So it's a massive target, and I don't think that's going to be possible without a full-on chugging along of the tier 2 cities and non-metro locations to actually, grow at a very, very hectic pace. I made to, the statistics also say that in the last 3 to 4 years, between 2017 to now, the warehousing industry has actually grown at a CAGR of almost 40% plus. I think that's phenomenal growth, and maybe it has to be doubled maybe by our guests here to be able to meet the targets over the next 3 years. So jumping right into the session, I'm going to start with Nirav. Nirav, welcome, and your quick views on the opportunity set, on the eastern sector, on tier 2 cities. What does it mean to be actually building out and developing, warehouses, industrial spaces, and logistic parks in the region?
Thank you, Amit, for having me on the fireside chat. Quickly jumping on to your question. This is an industry which I have eaten, breathed, and lived all my life. There's nothing else that I know of to do better in life. But the challenges that this industry faces keep changing year on year. We've seen days when people used to issue LOIs when the land was not even bought. And today, people talk of ready spaces. So when a customer or a client comes to a tier 2 city, his expectation is, I want tier 1 quality, ready supply, and available on tap. Unfortunately, tier 2 markets don't have that. So that's the big gap, that their expectation is tier 1 quality and ready supply. Unfortunately, both of these don't exist. So it's people like us who try to get ahead of the curve, start building ahead of time, start looking at locations which would work in the future, start development activities, and then probably have to wait 3 to 6 months for a customer to come in and occupy that space. So these are some of the things that are going on today as we speak in tier 2 markets.
Okay, good. I'm going to ask the same question to you, Pratiik. Pratiik, you'll be looking at the Eastern markets. And do you see similar challenges when the country is absolutely on fire when it comes to, especially post-COVID, when it comes to sheer demand of warehousing and industrial parks, the growth of e-commerce companies, the distribution needs from FMCG companies? What is your take on the demand coming into your region?
Yeah, so I mean, my answer is going to be very similar to what Nirav has already mentioned, and most of the points have already been covered in the previous session, as you mentioned. So tier 2 is now becoming a very important part, because what is happening is that tier 1 cities are becoming quite unviable in terms of the rentals that is being offered. And what we are realizing that now companies are mainly focusing on tier 1 cities only to create their mother hubs. And they're starting to planning to start creating their distribution hubs in tier 2 cities, and even to some extent there's some companies who are planning to do some developments in tier 3 cities, because the rental benefits in these cities would be much more beneficial than in tier 1 cities. Tier 1 cities are already facing a lot of issues in terms of supply of land, and therefore supply of warehouses, because land in all the tier 1 and metros are becoming very exorbitantly high. The input costs have already increased a lot, so the yield has really gone down. So I remember when we started doing this business some 15-20 years back, we used to look at a yield of around somewhere between 12 to 14%, which has now come down to sub 8% when we go for higher e-com players. So in comparison to that, tier 2 cities also becomes viable for developers like us, where the input cost is more or less the same, because it is, there's hardly any difference in construction costs, but at least when the land acquisition cost goes down, the yield becomes a little bit more viable for us to deliver warehouses. And so in that case, we are also able to pass on that benefit of rentals to our end users. So, but having said that, as Nirav said, that tier 2 cities have their own challenges. One of the biggest challenges that we face today is, like, we are trying to do some work in Siliguri and Guwahati, which is very close to Calcutta. So we've met a lot of landlords who hold a lot of land parcel. But when we take a proposal to them, their cost analysis are always based on grade B warehousing. So they're still stuck to numbers where they say that warehouses are constructed at a price of 800-900 rupees a square feet, which used to happen 5 years back. And now when we tell them that no, the cost of construction would be close to 1,400-1,500, so they're somehow very uncomfortable, and that is one of the reasons that we are not being able to close deals and provide services.
So purely from a demand perspective, of course, we understand the supply side constraints, land being one of them, and obviously one of the major constraints for the growth. We all understand that. But purely from a demand side perspective for your region, what sort of demand do you anticipate coming in the next 2 to 3 years?
Demand looks very good. Warehousing, as you mentioned, has been growing at almost a 15% year-on-year growth. E-com is growing at almost 20%, especially in the last 2 years. Tier 2 cities will see more. I feel they'll see more demand of warehouses than tier 1 cities, because what we faced in the last 1 year, we've seen that actually the first year of pandemic saw a very big growth in the demand for warehouses because of the business that the industry was doing. E-com did almost close to 1 lakh crore in the first year of pandemic, but last year comparatively, the e-commerce went down and the retail went to almost 3 lakh crore. So in tier 1 cities, people have access to malls, they have access to showrooms, they have the option of going out and physically sourcing products. But in tier 2 cities, their access to such places are very limited. And so their source of sourcing is warehouses. So that is why the demand in tier 2 and tier 3 cities would be much higher in comparison to tier 1 cities in terms of percentage.
Okay, so what sort of footprint are you hoping to build in the next 2 to 3 years to meet that demand?
So, I mean, if we talk about tier 1 and tier 2, so we are majorly working in Kolkata and West Bengal, but we've just started doing some work in Siliguri, and we are also exploring Guwahati. So Siliguri and Guwahati, we are definitely facing a lot of challenge in terms of land acquisition. But in Calcutta, we are planning to do around roughly 2 million square feet in the next 18 months.
Okay, same question to you, Nirav. If you could build, given the constraints that we talked about in a bit, what sort of footprint are you hoping to develop in the next 2 to 3 years to cater to this growing demand?
So our organization today is kind of geared to build and lease anywhere between 7.5 lakh to 10 lakh square feet per annum for the next 5 years. So we are looking at over a 5-year period about 5 million square feet of warehousing as well as industrial space to be built and leased out to customers.
Do you expect any impact on the prices or the yields of the rentals with this growth as well? Or do you think there will only be not just an escalation in the demand, but also an escalation of the rents, given the quality parameters that you mentioned?
So what happens is there is a lag in terms of escalation in commodity prices and the escalation in rentals. That lag is anywhere between 6 months to a year.
Okay.
So there will be an impact on yield for in the near term future, but then eventually all occupiers have to consider that all input costs have gone up, and this is the rental that a developer can afford, the rock bottom rental, and they would have to pay that rental if they want the quality that they desire. If they're willing to compromise on quality, obviously there is B grade or B plus grade available in that vicinity.
What sort of innovation are you trying to bring into your products? And
so,
is ESG an important factor? Let me add that. Is ESG an important factor as well?
So we are in all our buildings that we're doing, ESG is a very, very important factor. However, ESG is not driven from an end customer's perspective, but from our philosophy of causing less damage to the environment while we do development.
So your customers are not demanding ESG today?
No, not today. But from our development belief, we are doing a lot of ESG requirements that we are meeting today, including my previous panelist that mentioned, we are doing solar power on all our rooftops. We're planting close to 50,000 trees in each park, recycling all the water that is generated, and using recycled materials. So these are all the things that we do in all our new buildings. However, none of it is demanded by the customer today.
I see. And what kind of product innovation from a development perspective are you bringing into? Because given that commodity prices have risen, input costs have risen, what is it that you're doing to be able to build more efficiency in the end product? Or is it not possible in current times?
No, it is possible. The only innovation that one can do today and that helps us control our prices, input costs today, is volumes. And so when I go and sit down with a vendor and talk of dealing in volume, I do get the best prices, and which translates into square footage, more square footage to be built, whether it is buying steel or cement or any other things like emergency doors and firefighting systems, etc. The only innovation that you can do is volumes,
right?
And which essentially means that you go out and build more.
Right, Pratiik, because you also do metro city locations, is it more going to be in-city locations, in-city infrastructure, in-city warehousing, or will there be continued demand for just the motherships or the mega boxes? Or do you see now also shift for in-city products, going for the last mile distribution networks as well?
So we've seen a huge rise in demand for in-city warehouses in the last 1 year. So, I mean, this is mainly driven by all the e-com and the grocery markets who've started setting up their last mile delivery options. But these are much smaller warehouses, excuse me, which sorry, which ranges from around excuse me, 3 to 5,000 square feet. But the main focus is obviously on the mother hubs and the distribution centers, because that is where, as Mr. Nirav said, that is where we get volumes. Because generally all these companies are very restricted when they come to their rentals. So the yields with them are very less, and especially when we get into a metro location, the yields even go lower because the cost of acquisition is much higher.
Right. So, Nirav, while Pratiik was mentioning that land, especially in tier 2 locations, is one of the singular constraints, it is also in metro locations. What are the other constraints that you are trying to debottleneck?
So, apart from land, the biggest challenge that we face today is sanctions and approvals. And the panel before us was discussing about streamlining sanctions and approvals. And when you go to tier 2 cities in different states, all the rules, regulations, laws change from state to state, right? So you end up dealing with a whole bunch of agencies, different norms, different regulations, and sit down, and some need an EIA, some don't. Some need a plan to be sanctioned, some don't. You can just start construction. So these are after land acquisition, the second biggest challenge is getting approvals in a uniform fashion.
Okay. Okay. And third one, if any?
Third one is skilled manpower.
Right.
Nobody
I was
today
hoping
talks
you'd
about,
mention, somebody would mention that. Yeah.
Nobody in the previous panel mentioned it. It's the scarcity of skilled manpower, which the country, acute scarcity of skilled manpower that the country is facing.
Absolutely. I'm glad that you brought it on, Nirav. I think that's one of the major factors. We only think this is an asset business, but this is also people's business. I think that's fantastic. But let me come to about the institutionalization of this business. We've seen warehousing actually now becoming a mainstream institutional asset class. It was only the other day that I was actually on a panel, we were discussing REITs, and the thought we had was that the next asset class that will possibly be REITable will be industrial and warehousing. Do you think tier 2 is ready to actually jump into the REIT bandwagon anytime soon? Or if not, how far away are you from that?
Unfortunately, today, none of the developers who are operating in tier 2 markets have a decently sized portfolio, which is REITable. I mean, all our assets put together is about 2 million square feet. And if I want to go and list it out on a REIT, I still do not have, I would call it as an ideal size to go out and REIT. So maybe in a couple of years' time, we would be there where tier 2 cities would have REITable assets. However, in the short term, I think people like Indospace, Blackstone, and these are the guys who would have hit a plateau in tier 1 cities in terms of growth, would start looking at tier 2 cities and look for partners like us to kind of help them build that portfolio. And we would then probably have an exit somewhere down the line.
Nirav, just to your point, when you were mentioning about 6 months of vacancy, would bring you back to certain numbers. Pre-COVID, the absorption was less than the supply that was hitting the market. Since 2020, the absorption has been greater or equal to the supply coming into the market. What changed? Has the absorption changed, or has the supply has come down?
It's a combination of both. The absorption has also gone up, primarily driven from e-commerce companies, not just the big boys, but even the smaller guys. People like Nykas and Big Baskets of the world have also expanded their footprint. And the 2 years of COVID and the uncertainty that it brought in, development also slowed down. So this has both put together, it has brought in a little bit of equilibrium in the market. And as a result, we have started seeing rentals moving northwards. So if in 2 years ago, a market which had rental of, let's say, a tier 2 market had a rental of 10 to 12 rupees. Today, the same market operates at about 16, 17, 18 rupees. So that is because of a combination of both. Supply has gone down and demand has gone up.
Understood. Understood. Okay, great. So now, I mean, if you were to look at purely from the Western zone perspective, and of course you're operating out of Ahmedabad, are there key growth corridors that you see?
Oh yes, there are very clear low-hanging fruits that exist in tier 2 warehousing markets. The cities are no-brainers. It is, if let's say Ahmedabad, if I were to consider as a tier 2 market, though a lot of my friends from the IPC would tend to disagree, but I would still call it a tier 2 market. So Ahmedabad, Jaipur, Vapi, Indore, in the western part of the country, are tier 2 cities. And then there are those industrial clusters, so to say, which focus more on manufacturing rather than on warehousing. And these cities are, cities like Baroda, even some corridors of Ahmedabad. These focus solely on manufacturing. So these are also very good corridors to work with.
But given that you have something like a DMIC effectively passing through the western belt of the country, and it is largely going to focus on industrial development, shouldn't industrial clusters become more of a focus than for logistics, 3PL, e-commerce, which is anyway what tier 2 guys are offering?
In our development philosophy, we have moved away genuinely from warehousing to industrial. The focus is going to be industrial and not warehousing. We will build structures which are industrial compliant, and then if the occupier says that yes, I'm a warehousing player, but this works for me, we are more than happy to give it to them. But the focus will be on manufacturing going forward.
I will bring the same question to you, Pratiik. Where is your focus going to be? Are you going to continue to compete for the 3PL e-commerce logistic companies, or are you also looking at industrial parks and industrial clusters as an opportunity set? Given that there's a lot of push for manufacturing, even in the eastern coast of the country.
With us, Amit, it has been actually very different. So when we had got into this business around 30 years back, we actually had started with development of industrial parks, and we didn't even know what a warehouse meant at that time. It was only after 8-10 years that we had started developing spaces to lease, but they weren't called warehouses those times. I mean, they were more known as godowns that time, because they were like absolutely grade C constructions. In the last 5-6 years, we've seen a lot of growth in the warehousing industry, but surprisingly, in the last 1 year, we've seen a lot of growth in the industrial segment also, which had kind of waved off before that for almost 7-8 years. So in the last 1 year, I think out of all the leases that we've done, 50% of the leases happened actually with manufacturers and industries. So we are quite confident on the growth for industrial also on this side of the country. Definitely East is a very important part. And now since we have started offering space on these for industries are also more comfortable to come in, because their main capex cost is immediately waived off. So their risk goes very low. In the last 7-8 months itself, we have leased close to 0.5 million square feet for industries. So we are definitely seeing a lot of intent coming in for that, and we are actually now focusing on both, because there's equal demand for both. So what we've actually started doing in our parks is we started creating the basic shell, and then we keep enough flexibility to either swing it towards the warehousing side or the industrial side, however the demand comes.
Okay, that's, I think, excellent. I think that's a brilliant strategy. I do believe what you guys are saying is in line with what I think the outlook also keeps on telling us. I'm going to also just finally going to ask you the same question again, Pratiik, that you mentioned land as one of the constraints, and of course, Nirav brought out 2 other points. Are there any other constraints, whether it's infrastructure, road, power, connectivity, any other things that you wish were better for the eastern region for it to further accelerate and reach the sort of development potential that it needs to develop for itself?
I think in terms of that, it is mainly, as a lot of people have already mentioned, the involvement of the government and the approvals is very important. So this is the main issue that we've been facing since last 4 or 5 years. I mean, we can develop a 5 lakh square feet warehouse in 6 to 7 months time, but we take 1 year for the approval itself. So that itself takes out the entire viability of the project, because once we invest into the land, the main capital is already invested, and then if we take around a year and a half for approvals, the entire viability of the project goes off because the yields have already come down. So I mean, the government approvals, I think, are the biggest constraint. If that is fast tracked, then everything else can be managed by developers on the personal level.
Fantastic. Thank you very much, Pratiik. A 30-second closing remark from you, Nirav, on the tier 2 opportunity for warehousing and industrial parks in our country.
I think times are very challenging, but very exciting as well. And with the advent of new age customers coming to tier 2 cities, they will demand for better quality products, better infrastructure from people like us. And it's going to be a great time looking at developing these assets and handing it over to them for operation.
Absolutely exciting times for you, Nirav. People are looking at you when they're looking at setting up their businesses in the Western region, moving away from expensive locations like Mumbai and Bhiwandi, and looking at growing into the hinterland of the country. Pratiik, 30 seconds closing remarks on opportunities for tier 2 warehousing and industrial parks for yourself.
I think tier 2 cities have a great potential. I mean, we do need a lot of know-how to be I mean, educated in those cities, so that people can develop better infrastructure and can develop grade A parks and make them more futuristic. But on the growth level, I think they have great potential, and we are quite aggressive and confident on developing in tier 2 cities.
Thank you very much, gentlemen. I think it was an excellent session. I think you've led the path to explaining to the audience, to our country, to our world, that there is a huge potential and a need for further acceleration of the tier 2 locations. All reports have pointed out that the growth and the aspiration to 500 million square feet cannot come without an extraordinary growth happening within the tier 2 locations. I think there'll be some level of maturity, some level of plateauing that is already happening, is likely to happen in the tier 1 locations. So clearly, the tier 2 cities, the growth corridors of our country need to rev up and need to fire up a lot more. Just to very quickly say that Nirav has mentioned about 3 constraints. The first, of course, being land, second being sanctions and approvals, and the third being availability of skilled manpower. He's also mentioned that industrial asset classes, including industrial manufacturing, is a great potential in the infrastructure development and corridor. They've been focusing on that in a very large way, a very sticky asset class, and likely to continue to be an attractive segment of development. Cities of Ahmedabad, Jaipur, Vapi, and Indore continue to have the largest amount of eyeballs when it comes to the occupiers. Those are the cities in the Western region to watch out for. Of course, there'll be other manufacturing hubs like Baroda, etc., which may also come on stream. Going to Pratiik, Pratiik mentioned that it has been very challenging. The old school mindset of landowners in the hinterland of the country still is changing, needs to change. But there is an opportunity set in city housing continues to dominate demand and is continuing to grow. Of course, albeit at lower yields, there has been a challenge for yields, but yields are likely to go northwards as people demand better products and better facilities. There is an opportunity to get better outcomes of these products. I think what is Pratiik has also mentioned that there is a significant opportunity both in the industrial as well as warehousing segments. Both are zones that need, or both are asset classes that will continue to find fancy. It's not just warehousing; it's also industrial parks that are finding great amount of demand. We are apparently about 4 to 5 years away, is what the panelists felt, when it comes to maturing as a geographic distribution from a readable perspective. But it is very likely to happen. There is an outstanding demand of almost about 10 million square feet of warehousing and industrial parks when it comes to tier 2 against a supply of only 3 million. So the potential at least to grow 300 times, 3x on the current footprint. And I think that itself is a fairly big challenge that our gentlemen are here trying to overcome in the next few years. So I think it has been wonderful talking to you guys. I love the conversation. I'm excited about what you guys are up to, and I wish you all the very best. Sapna, if there are any other questions for our audience, please do.
Yes, first of all, Amit, you yourself are an investor. So from an investor's point of view, how bullish are you on this sector?
Sapna, actually, I'm very bullish, for the very simple reason, the land that we bought 10 years ago has actually become 5 times more valuable. So just the fact that if, the beauty of tier 2 is that the value of the asset actually grows phenomenally over time. That does not happen in a Bhiwandi. I mean, it has happened, but, unlikely to continue to happen in the tier 1 locations that people have typically gone to. So, I do believe that the potential for underlying asset appreciation is still very large. I'm talking to a bunch of friends to see if we can actually go out and acquire 100-acre land parcel, okay, and grow it up to 1,000-acre land parcel, okay, Sapna, and actually give it on warehousing or give it for infrastructure for the next 20 years. Because at the end of that 15, 20-year cycle, when the asset value has actually depreciated to zero, the value of the underlying would have actually become 5 times more or 10 times more. So that is actually quite exciting because, the city boundaries are expanding everywhere. And that's the beauty of tier 2, tier 3 cities, that they're suddenly growing outwards and very rapidly. So I actually think that if I'm not going to actually stick to the yield, I actually think that the value of the underlying can be a very large equity kicker for us. So I'm quite excited about that opportunity. We're working very actively in a few zones.
Fantastic, good news for the warehousing players who are here today with us. So and another point was the GST. We from our earlier speakers, Dr. Hiranandani also, there was a mixed reaction on GST. So from all our speakers, has it had a positive impact or a negative impact, or what is the ratio? Amit, starting from you, how do you see GST impacting warehousing?
I think Sridhar rightly put it. I think we need to have a more rationalized GST regime, Sapna. I think Sridhar is a good friend, he's an expert, and I know that unless we rationalize GST, we make it as a pass-through, and that's true for all rental assets, Sapna, not just for this. We've had a problem of GST in any rental asset. Unless you're able to get it for credit, you'll never be efficient enough on tax. So I think that's an outstanding demand, continues to be an outstanding demand, and we certainly need rationalization of GST. You cannot have, you cannot have not have a GST input credit. It just makes it very, very inefficient to actually offer a competitive rental product. So I remain with that view, Sapna. I mean, okay. I don't know about the panelists.
Okay, Nirav, what's your take on this? Because GST has opened up, the boundaries between states and cities. But as Amit said, ITC remains a problem. So how has it impacted?
I would agree with our previous panelists as well as Amit that ITC should be given to even warehousing players. For the simple reason that today, let's say a 20 rupees rental product, if you get an ITC, we are talking of 16 rupees as the rental, because if today 18% GST is my cost. If that cost becomes a pass-through, we are talking of lower rentals already. So and that benefits everybody. It just doesn't benefit us, but it benefits the occupier. It benefits people who order online as well. I mean, their product prices are going to come down. So it's a rationalization has to take place. There's no way out in this.
Okay. Pratiik, your last comments on that, GST good or bad for the sector?
Sorry, I was saying that GST I think is very important. The input tax credit availment in warehousing would really boost up the industry. In fact, I was having this discussion with another GST official the other day when I was mentioning that we as warehouse developers, we are ultimately providing services and we are not the end user. So all our vendors get the benefit of input tax credit. All our clients, all our tenants also get the benefit of input tax credit, but we don't. And that additional cost of 18 to 18% on the construction cost, especially in today's inflated rate, is very high. And we basically, if we get the input tax credit, we will be able to pass on that benefit to the end users.
So I think the entire way of looking at warehousing, Amit, has to change from the government perspective. If you want to.
I mean, GST started the warehouse revolution. Let us not forget that. But you can't be at the starting line. You need to move on, and I think that's what we want.
Right, like Pratiik said that we need to, look at it in a different way. Nirav mentioned the same thing. We have to relook how warehousing sector is, what kind of services they are providing. So fantastic. I think one thing that we have, or one takeaway from this session is that the tier 2, as our topic says, is the growth hub for warehousing sector. And rightly mentioned, Nirav rightly mentioned, a lot of tier 1 players who, warehousing players are now moving on into the tier 2 cities. So thank you so much, Amit, for that fantastic, moderation of the panel, and for sharing your, plans, your investment plans, which I'm sure is a
It's a
music to
secret.
ears to a lot of people.
Please edit it out.
So thanks, Nirav. Thank you for sharing your
Thank you.
perspective on how the tier 2 city of Western India is doing, and Pratiik for the Eastern India perspective of warehousing sector. Thank you so much for being here with us. And
Thank you very
sharing.
much.
So much.
What a
Pleasure.
pleasure.
Thank
Thank you.
you. Thank you.